Canada is in recession. Well, technically. And we'll dive deeper today under the hood on what those numbers mean and what the future looks for Canada heading into the following quarters of 2026. Welcome back to Building Wealth on the Go. I'm your host, Brad Wilson, portfolio manager with Q Wealth Partners and wealth advisor at KLT Wealth Management. Today is June 2nd, 2026, and we're back with our podcast here today, diving into a Canadian economic update. So we got big headline news last week on Friday that GDP for the second quarter in a row in Canada did see contraction, which is a technical indicator and a signal that we are in a recession. By definition, two consecutive quarters of negative growth is a technical recession. So today we're going to dive into what are the underlying economic numbers in Canada, where are we trending, what are economists saying, what are they talking about, to give you a bit more context on what those headlines might mean. So first off, we've got some summaries of the numbers and the data here on a bit of a chart indicating the details from the last release from Stats Canada. So you can see in Q1, it was a very, very modest decline of only 0.1%. So this is where there's a lot of people pushing back in this area, saying there could be numbers revised. It could be flat or positive by 0.1 or 0.2%. There could be a small adjustment, and that would remove that technical recession trigger. So there is a lot of people taking it with a grain of salt that we did see that negative growth there in Q1. One of the bigger factors in this is we have seen a more contraction and decline of business investment in Canada, and tariffs are a big driver of that. We are seeing Canada seek elsewhere and international opportunities for a business investment, and that's kind of hoping to turn around things as we progress along with trade deal negotiations with the US. CPI inflation, so inflation was up. This is a 2-year high at 2.8%. We did see core inflation reduce though a little bit to about 2.2%. So, it's still within range and target for the Bank of Canada. And on the far side, you can see Bank of Canada rate is 2.25%. They have held since we last had our economic update. Next review is June 10th, and there is prediction that they're going to maintain rates. And I think with a lot of the uncertainty and everything going on, that's to be expected. And a lot of people are even forecasting that to remain the same for the rest of the year. Unemployment, we did see a tick up in April to 6.9%. It was down at 6.7 in March. So we have seen a good amount of job losses this year in Canada. We have seen the higher subsect and the higher percentage of those job losses being in the younger crowd, sort of the 16 to 25 range is where we're seeing a lot of those job losses. And then a lot more full-time job losses, which is signaling more so of companies restructuring rather than doing mass layoffs. So that's where a lot of economists are saying we're not overly concerned with the job losses because there is a bit more of a restructuring rather than a mass layoffs. So let's dive into that GDP growth and what factored into that technical recession release and sort of the news on that. So you can see in Q4 of 2025, it was a 1% contraction of negative growth. And then we had the 0.1% as mentioned in 2026 for quarter one. We had strong growth in Q3 of 25, and there was negative growth in Q2 of 2025. So you can kind of see 3 of the last 4 quarters have been negative growth in Canada. So it has been some trying times for sure. One of the bigger surprises is on the right-hand side, you can see a lot of economists and consensus was that Canada would see growth in Q1 of 1.5%. So it was quite a shock to see negative growth in Q1 that was not expected at all. As we dive into sort of CPI inflation and unemployment rates, you can kind of see over time inflation has been trending upwards. And again, we're going to see some pressures on that from rising gas prices due to the war in Iran and the oil prices there surging. That cost funnels out through to various different sectors and services because the cost of transporting goods and getting stuff from one place to another, whether it's stuff at the grocery store, clothing, whatnot, all of that trickles through to those different areas as well. And on unemployment, you can see we were trending down from a September 2025 peak at 7.1%, but we did bounce back up to 6.9% here in April, as mentioned there. So as you can see, this kind of unemployment shows you a little bit of what I mentioned of the full-time job losses from April versus part-time jobs gained. So you can see more part-time work was established in April versus the full-time jobs that were lost. So the net total was about 17,000 job losses in April there. So you can kind of see the breakdown, which I mentioned, the youth segment. So 15 to 24, 14.3% unemployment. The core aged is about 6% for everyone. 25 to 54 amongst core men, it's 25 to 54, it's 6.1%. And then you see the national average at 6.9% there. So let's look a little bit at some economist reactions as well as GDP contributions. So as I mentioned, some of the big things is the investment in businesses here in Canada. One of the big ones too is there's a lot more gold imported. There's a bit of a gold surge in Q1, which was kind of subject to that drawdown in GDP. So you do have contrasting viewpoints on this, but there's a lot of people cautious to take the technical recession at face value and call it a full-blown recession in Canada. They're looking more to other indicators to kind of gauge a sense of where we're at. So to wrap up, what are we watching as we move forward here? Obviously, it's not the best of times from the Canadian economic standpoint, but there is some optimism and some who are still bullish on the sentiment here in Canada. So potential GDP revisions and also seeing rebound in Q2. There's a lot of people focused on that. There is some positive news coming out of the Canada, US, Mexico trade agreements. There's a lot of positive talks about we want to get a deal done from a lot of different parties. I know Prime Minister Mark Carney has been in New York talking about trade negotiations and whatnot, and the representatives from the different countries as well are starting to talk, it appears. So that is good news. Bank of Canada decision, June 10th. That is coming up. Probably by the time you see this, podcast has already happened, and likely it is another hold at that rate level. So that's all we're watching here right now. Overall, yes, a little bit of a technical recession, but a lot of people are cautious to call it that. Is the summary today, and we're going to continue to watch a lot of the various indicators on where we're heading. But overall, this is your Canadian economic update for June of 2026. We didn't have a May episode as a lot of these numbers were coming out end of May, so we got this out in June. We'll have a second podcast out later in June as well, or early in July. That diving deeper into an educational topic. So thanks as always for watching, and we will see everyone on the next episode.